Sector under pressure again today after coming off the worst performance in a couple of weeks as some of the year's best performers lose momentum, including Palantir, on pace for the 6th straight day of losses, now down about 23% from the highs. Longtime Palantir bear Brent Thill joins us from Jeffries. Brent has a sell rating and a target of 60. Brent, it's good to have you. You actually wrote about this a few weeks ago in which you called it a disconnect between valuation and achievable growth. Can you walk viewers through your thesis?
Yeah, good morning, Carl. Overall, tech is under pressure across the board, so this isn't unique to Palantir. Everything that we cover is down given the run that we've had up. So I'd say that part of the downdraft is not Palantir related. It's more market and technology plus software related. For Palantir, there's no multiple that's ever been in our coverage universe that's sustained this multiple. We've said repeatedly, this is a phenomenal company. This company is executing at a level that no other software company is executing. The challenge becomes the valuation. The minute that they move one way down, the stock's going to be under duress. And we haven't seen a deterioration in the fundamentals. That's not the call. The call is you can't trade at 8 times revenue. There's no precedent. If you put the most expensive software multiple on Palantir, the stock would be $60 on next year's numbers. So, even if you give it the benefit of the doubt, which we have in terms of the price target, you have a material downside on the multiple. So this isn't a question of the fundamentals. We've said repeatedly that they're executing better than the majority of the industry and have executed on a rule of 90, which is pretty incredible. Top line growth and margin together equal that. No one else is even close to them. The question is sustainability, and then can they continue the acceleration? But really, this sell-off has really been driven more as a broader tech software sell-off than it has anything else.
Right. Well, yeah, as you pointed out a couple of weeks back, I mean, not even 74 times revenues. I mean, I can remember some multiples like that from the late 90s, Brett, but it takes a while to get back to anything close to seeing that. What about the sell-off in tech overall? I'm just curious. It's August. Retail flows may have slowed. I don't know what you're hearing from your client base as well, but I mean, it is getting pretty significant here, at least in terms of getting some people's attention.
Yeah, on our Jeffries desk, it's basically risk off. We see a lot of the AI winners get trimmed. At the beginning of the year, it was all about macro, right? When tariffs hit, everyone's concerned about macro. We didn't have the macro concern. We didn't have the fundamental pullback. You saw a lot of money move into the group, and then you've seen a pretty material move up. And so I think it's just the magnitude of the move up. If you look still year to date, you've got companies like Oracle up almost 40%, Microsoft still up 20%. You've had really good gains, and I think many don't really know what the shape of the curve looks like in the back half. We don't know what's going to happen with the political environment. There's still concerns around AI adoption. Are we in an AI daze and confusion, and are we going to delay decisions? So right now, I think given the magnitude of the move, this is more of a trading risk off. This has nothing really to do with anything fundamentally that we're seeing.
Right, the underlying fundamentals. I mean, obviously, we got earnings from all the hyperscalers. Nobody changed their CapEx plans other than getting even higher in terms of what they're planning on spending. How important is Nvidia next week, though, if we continue to see this kind of a sell-off?
I mean, they're bellwether, absolutely critical. We don't see any slowdown across our tech team in terms of the positioning and where they sit. So we don't see a pullback. We've actually raised CapEx by over $50 billion. So to your point, David, we just don't see anything that will cause any type of major disruption for Nvidia or the enabling AI infrastructure. And that's what continues to work right now in tech, is nothing in the application layer and software. It's all infrastructure. And that's where investors are staying in right now because we're continuing to see this AI build up. We haven't seen the enterprise adoption.
Sorry to cut in. You mentioned that. I want to get a couple questions here. But software, companies, I mean, is that going to continue to see weakness? The likes of Adobe and many others, their Salesforce, is that a concern to you in your coverage universe, given AI's rise and the agentics and what that may mean in terms of their ability to lose share, essentially?
It is. Right now, again, I think we're seeing the application group like Salesforce and Adobe down the most. So a lot of those stocks are already embedded. Your concern that you're mentioning, that's in. We don't think the disappearance of Adobe and Salesforce is overnight. We think they're in a better spot than investors are giving them credit. They're the cheapest names in our coverage. So we think if you want to take the opposite side of this, that group has been hit the hardest and probably won't see as big a downfall as Wall Street's expecting. We just haven't seen AI hit the application layer yet, and that's why, again, all the money's moved out of that sector. It's moved into infrastructure, and again, the energy companies, the data center companies, Microsoft, Oracle, anything is providing enabling infrastructure to let those applications above that infrastructure work. So that's already been embedded. Yeah, we share concerns, and I think those companies are acting. They're taking it serious. They're putting the right pieces in place to enable their AI to come alive. It's going to take time. It's a less than 5% of total revenue for all the large cap software companies. So as we've said, 26, 27 is a more critical year for inflection for revenue for these AI application companies, but it's not there, and I think that's why investors aren't there in those stocks right now, because they just don't see the revenue.
Right. I mean, I keep thinking, you keep talking about software disruption, and we have seen baskets of AI disrupted names under pressure, but this week, Brent, it was about AI beneficiary baskets that are under pressure, and I just wonder if you see anything different about that.
Well, MIT came out with a survey and said 95% of enterprise AI is failing. And we've said this, that any new technology, we're not going to wave a magic wand and suddenly alive. I mean, our firm, we're deploying AI in multiple areas. It takes time. It takes time to train. We've had multiple training classes in the last couple of weeks here that our entire firm is going through. Then you have to get the use cases. Then you have to get the ROI. It takes time. This isn't like loading up, Perplexity or ChatGPT on your phone and creating a summer barbecue ad for your streak to come over to you. Like, this doesn't happen that quick. And I think everyone's saying the same thing, which is like, okay, I see it on my iPhone, well, why am I not seeing it in my enterprise? And that's going to be a 26, 27 event, not a 25 event. And we think, again, that many have gotten too overzealous about the return of AI. We are excited over time, but this just effectively, this is like building the pyramids. This is not going to happen overnight.
Right. Yeah, you're not alone on the training part. That's happening in-house over here, too. Brent, appreciate it. Talk soon.
Thank you.
Brent Thill on Palantir.
Coming up, competition in the ETF business is heating up. Vanguard getting into the actively managed ETF area. Ron Barron also eyeing ETFs of his own. We're going to talk to the former CEO of Engine Number One, now turned head of ETFs at TCW. We'll talk about what's going on in that space. Also, Disney is gearing up for a major ESPN announcement this week. It could usher in a new era in the streaming wars. We'll bring that.